Hello friends, my name is Radha Masood. Today we'll discuss about a topic earned value and earned value EV. Friend, this is a very important topic with respect to project management, PMI, or PMBOK, project management body of knowledge. And today we'll see this topic in detail with respect to PMBOK, project management body of knowledge. Friend, if you are a student and studying project management in university, or you are planning to give exam of PMP, so this is very important because friend, at least 10 to 15 questions will definitely be there in the exam of PMP or in the university level exam, in which you will see this topic earned value analysis or the relevant topic related to earned value. So you can understand that how much it is important to understand the concept of earned value. Secondly, friend, as a professional project manager, this is necessary to understand the concept and use it in the implementation of professional implementation of projects. So let's start. Earned value EV. Friend, first of all, I would request to please subscribe to my channel and click on the bell option as well, so that my new videos can reach to you. So let's start. Earned value EV. Friend, the earned value or EV short form, this is a topic related to project management, and under the project management this topic pertains to earned value analysis. Okay, so first of all we have to understand what is a project actually, because all the things goes or revolve around the project. Okay, first of all we have to understand the project, then we will discuss the earned value analysis, and then the specific term EV we will discuss. So first of all we have to understand what is a project actually. Friend, project is a temporary thing as per the PMBOK, which has a beginning and ending point, and it gives you a unique output or product, that is called as project. For example, if you are implementing e-commerce solution and you have to deliver that project within 4 months, so after 4 months the project will finish, no more resources will be working there, and no more expenses on the project, and you will have a unique output or product that is called as e-commerce solution. So we will say that it is a project. Why? See friend, first of all, project should have to be temporary. Temporary means that it has a beginning ending point, and it after some time period it has a time span, time box. So after some time it will finish. It will never ever be an ongoing activity, first of all. Secondly, it give you a unique output or product. For example, in that case, the e-commerce implementation is a unique output. Similarly, if you are building a house, if you are building a flyover, you are introducing a new business process in company, so all these are the examples of project. You are implementing mobile application, you are you are deploying a new website, so all these are the examples of friend the project. Why? Because all these the examples are unique, temporary, and it gives you a unique output, product, service, or result. Now, if you can understand the concept of project here friend, now we can talk about the more important or relevant topic, earned value analysis. Friend, this is necessary to first of all discuss the topic earned value analysis in detail. What is earned value analysis friend? Basically friend, earned value analysis is a topic in which basically we compare the planned work versus the actual work. Okay, and it gives you a the progress report, you can say a progress about your project. Let's take an example of earned value analysis. What does that mean actually? If you just see these terms, earned value analysis, like what you have earned actually. Earned value analysis means that what you have earned, how you are comparing or calculating, you are basically comparing the actual work versus the planned work, and you are calculating are you on the track or not. Take an simple example here. For example, you have to meet your relative at some location. Okay, so you have to go from location A to location B. Okay, uh, and for example, you have by using any conveyance, like for example you can say, let's assume that train for example, or any other conveyance. So you have a plan. What you have planned, you have to go from location A to location B, and your planned value, you plan that within 2 hours you will complete 20 kilometers so that you can reach on time. This is your planned work. Okay, you plan that within 2 hours you the total distance is 20 kilometer, and within 2 hours you will cover that distance of 20 kilometers. So within 2 hours, if you complete the 20 kilometers, you cover the 20 kilometers, so you will reach on time and to meet your relative. Now friend, after 1 hour, when you recognize that only 5 kilometer has been covered. Why? Because due to traffic on road, or due to a very high traffic on the road, you covered only 5 kilometer. However, as per the plan, after 1 hour you should have to complete 10 kilometer. Okay, so you are behind the schedule, you are behind the planned work, so you must have to take some corrective action, otherwise you will not reach on time. So this is a very simple example of earned value, friend, in which actually what we have done, just try to focus here, what actually you have done, you basically compare the actual work versus the planned work, and then you calculate the progress or performance accordingly. The same thing happened in the project as well. This is just an example here. The planned work was that within 1 hour you should have to complete 10 kilometer. However, you have completed only 5 kilometer. That means that you are behind the schedule. You must have to take corrective action, otherwise you will not reach on time. So friend, this is called as the concept of earned value analysis here in the project management, in which we compare the actual work versus the planned work and calculate the performance of our project, performance in terms of time, cost, budget. This is called as the concept of earned value analysis. Now coming towards our main topic, earned value, EV. What actually means earned value, EV? Here friend, earned value, also known as budgeted cost of work performed, BCWP, is the amount of the task that is actually complete. Okay, the work which is actually complete, it is called as the earned value. Friend, this is very important. Try to understand the focus on work actually. Earned value means actual work. One thing is planned work and one thing is actual work. So EV or earned value means the work which actually has been done. You think that you will cover you plan that you will cover 10 kilometer in 1 hour. However, you covered only 5 kilometer in 1 hour. So what is your actual work? 5 kilometer. Okay, are you getting my point? This is the concept here. Now friend, here the task budget is, for example, just take an example, you have a project where budget is $5,000. The task start date is 1st January and the task ending date is, finishing date is 10th January. 1st January is the starting date and the 10th January is the finishing date. Now let's say the actual percent complete of the task step 1 is 40%, therefore EV is 5000 multiplied by 40%, so 2000 is the actual work completed or the earned value. Now how we have completed? Again, try to focus again. The project budget was $5,000 total budget. Okay, project start on 1st January and the finishing date of project is 10th January. After on the 1st of January, on the 6th of the January, actual percent complete of the task step 1 is 40%. So now friend, after few days when you calculated, you recognize that only 40% work is completed. Okay, so what you can do, 40% multiply by the with the budget which is $5,000, so 40% multiplied by $5,000, so it will be $2,000. So that means that only $2,000 work has been completed. Okay, so that is called as the concept of the earned value. Earned value means that actual work which has been completed, and the formula is budget multiplied by the actual work completed percentage, so you can get the earned value. So friend, thank you, thanks a lot for your time, and that's all from my side. I hope you like this video. If you like, please share it with your friends and colleagues, and thanks a lot for your time.